I hope I'm wrong, but I think we're heading for a global depression.
America is now bankrupt.
We're at the end of an empire right now. It is the end. It's the end of this. And all empires always come to an end. The Roman Empire, the Greek Empire, Chinese were the earliest. Chinese were the first guys to use paper.
Right.
So what we're looking at today is the end of the American Empire. So it's a very dangerous time. It's explosive, with Palestine and Gaza. All the stuff that's going on is an end of times. Not biblical, but just an end of an era. And the trouble when this comes to an end, war follows. That's what I'm afraid of.
Instead of depending on banks, the stock market, or saving accounts, people should concentrate on building their own assets and earning passive income. Banks love it when people borrow lots of money and buy liabilities, as it makes them richer while the borrowers get poorer. The value of money saved gradually decreases since the banks are able to lend out 10 times as much under the fractional reserve system. You've been made to believe that saving money requires hard labor. They pay up the plethora of taxes once the fractional reserve system prints it. Banks promote borrowing for liabilities, whereas wealthy people borrow for assets to provide passive income. Instead of depending on the stock market or savings, entrepreneurs should build their own assets, in addition to depreciating your savings and profiting from interest, taxes, and tax-free debt. Bank makes money by lending out more money than they actually own. Build up debt and profit passively from stock market investments, all the while collaborating with experts to reach financial goals and capitalize on tax breaks. The speaker learned the formula for wealth and the value of non-taxable passive income from playing games like Monopoly. The wealthy don't work. Instead, they own assets. If you have the correct financial knowledge, you may take advantage of tax regulations and discover new ways to make money by using debt. Following the 2008 financial crisis, banks granted the speaker $300 million in tax-free real estate, a sign that the economy is in a bubble with phony money and soaring prices across the board. Because of the ongoing need to manufacture money due to the growing national debt, banks will confiscate all of your money throughout this crisis. Since selling is essential to maintaining sales and generating revenue, it's an essential talent to have in times of crisis. Robert Kiyosaki predicts that the Bank of Japan will play a significant role in the next phase of the banking crisis. According to the author of Rich Dad Poor Dad, there is a significant risk associated with the bank's exposure to derivative markets. According to Rich Dad Poor Dad author Robert Kiyosaki, the banking crisis is far from finished, and one of the major central banks in the world will play a significant role in the next chapter. The personal finance expert states his pessimism about the current market surge in an interview with Fox Business on Thursday. He also cautioned that Japan's central bank might be the next major organization to experience instability. Given the banks of Japan's significant exposure to the derivative markets, Kiyosaki declared the biggest bank that's going to go down is the Bank of Japan. In the past, Kiyosaki has predicted the rise of the interest rates by other central banks worldwide will cause the derivative market to collapse. Derivatives have been financed by the Bank of Japan. The derivative market is worth $4 trillion, he stated to Fox Business. So, we haven't seen the crash coming yet. The Fed funds rate is currently in a range of 4.75% to 5% as a result of the Federal Reserve's aggressive rate hikes over the past year to control inflation. Interest rates have not been this high since 2007. Kiyosaki has criticized the policy change of having a significant negative impact on asset prices. In contrast to economists, he believes that the fallout from Silicon Valley Bank's failures should be kept to a minimum. Although many believe that the bank's problem were more the products of poor risk management than systemic weakness. The tech-focused bank's early March failure raised concerns about the possibility of a larger banking crisis. Before SVB was eventually shut down, it was said that Fed authorities had been aware of warning signs for years. As distressed banks like First Republic have regained their footing following prompt assistance from the government and other banks, market volatility has eased in recent weeks. However, analysts caution that the crisis has increased the likelihood of a recession because banks are suffering significant capital losses as a result of the collapse of SVB, which may tighten lending standards and slow down the economy. Since 2021, Kiyosaki has been pessimist about the market, saying that investors would soon witness the biggest crash in world history. At the time, he advised his Twitter followers to buy precious metals and cryptocurrency since rising interest rates were certain to deflate asset values. Because the existing financial system is built on debt, according to Kiyosaki, it is inherently defective. Banks create money on a continual basis and lend it to people, but they never actually hold the money they're giving. Because of this problem, the system as a whole is based on a house of cards that could collapse at any time. Thus, what would occur if the few banks failed? Bank failures, according to Kiyosaki, might trigger a catastrophic economic collapse. People would start to lose their money, and the dollar would start to decline in value. it won't be enough to stop a total financial collapse. The government will intervene to support the system, which would lead to inflation. According to the author and investors, this is where other assets like gold, silver, and Bitcoin come in. According to Kiyosaki, cryptocurrency and Bitcoin are good substitutes for the established financial system. Since cryptocurrency are decentralized, no single entity nor a government controls them. He claims that as a result, they are safer and more stable than conventional currency. According to Kiyosaki, cryptocurrency provides a number of benefits over fiat money. For instance, unlike fiat, cryptocurrency is global in nature and can be utilized anywhere in the world. Additionally, it has high divisibility, which makes it ideal for smaller peer-to-peer exchange. Naturally, there are dangers associated with cryptocurrency investing as well. The value of cryptocurrency might change greatly due to the unstable nature of the market. Kiyosaki, though, thinks that the advantages and prospective rewards of cryptocurrency exceeds the risk. With the help of the Circle's USDC, which had banks reserved, the story spread to the cryptocurrency space. The announcement that it was an SVB customer caused it to lose its peg. This raised worries that the stablecoin's backing was diminishing. The markets were somewhat relieved when it was eventually determined that Circle's reserves were safe. Because of SVB's diminished, both controlled and decentralized markets saw chaos. US authorities acknowledged that they acquired Silicon Valley Bank (SVB) in order to calm depositor anxiety and stop the crisis from spreading throughout the banking sector. This reminds me of the reaction of the COVID-19 pandemic in 2020 and the 2008 financial crisis. Regulators devised an emergency plan in less than 48 hours to secure every deposit made at SVB and cryptocurrency lender Signature Bank. The Federal Reserve also established a loan facility to assist other banks in meeting depositor demand. The quantity of buy and sell orders at various price points, which represents the market's liquidity level, is referred to as market debt. For cryptocurrency traders, the decline in market debt is a serious worry since it may result in higher price volatility. It may become more challenging for traders to execute sizable orders without causing the market price to move when market depth declines. Market data from Kaiko indicates that the bankruptcies of crypto banks and disruption in USD payment channels have resulted in a significant decline in market depth for cryptocurrency exchanges. This year, increased cash flow with the help of these lessons. When used prudently, the covered asset can open the door to financial independence. These tactics can be helpful if you want to leave your 9-to-5 job, take back control of your schedule, or create financial stability by having multiple sources of income. See what particular assets Kiyosaki supports in 2023 and how to take advantage of them using his tried and true passive income strategies by reading on. Before making any real estate purchases, Kiyosaki emphasizes the significance of conducting extensive due diligence. Examine key performance indicators such as the cash-on-cash return, predicted rate of return, and price-to-rent ratio. Calculate whether rental income positively outweighs all costs and cash flows. Consider location, potential for development and demand, and property taxes as well. Kiyosaki advises using professionals to do a thorough inspection of any property before making any purchase. If you prefer completely passive ownership, you can rely on property managers to take care of daily operations. Real estate typically appreciates gradually, and rentals eventually increase in line with inflation. According to Kiyosaki, rental property is therefore a prudent long-term investment. That's all for today. If you like this video, please give it a thumbs up. Make sure to subscribe to our channel and hit the bell icon to receive notification.